The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule, and that's all the rules there are.
Hello investors, welcome back to the Rick Cliff Investor Show. Today, we're going to look at Comcast, and I am your host, Marquise Harding. So revenue growth for Comcast has risen by 30.63%. Profit growth is the same. Profit margin is 19.39. You want that about 20%. So that's an X. Gross margin, there is no gross margin because profit growth and revenue growth are the same. But however, there is a net income growth of 38.71%. Net margin growth of 85.96, almost 86%. Free cash flow, it is grown about 46.91, almost 47%. Not bad. Actually, not bad at all. Not bad free cash flow growth. They're fairly valued at $17.36. Free cash flow yield is not bad at all. It's at almost 6%. It will take almost 8 years to pay off all their debt with the free cash flow. They're buying back shares, which is good. They're pretty much buying back 217 or 217, I would say million shares. I could be wrong. 2.1 million shares. So they're giving you roughly 4.75%, almost 5% more value to your shares. They have a fantastic return on equity and return on invested capital. Return on invested capital is about 14.7%, and return on equity is 19.7%. Not bad. So let's look at the forecast. They have about 45 analysts on Comcast, and they're predicting a high of 73.5. Average of 55.49, about 55.5, and a low of 40.40 And I expect the revenue to grow by the end of this year about 8.5%, almost 8.56%, 8.56. Wow, I cannot talk. This full year from last year. Then next year it'll be 1.66%. Oh, I can just look right there. But let's look at mine. Oh, sorry, I'm watching Strongman Personal Finance. I love that guy. He's hilarious when he clowns on grifters. But that's for another video. So look at the discount cash flow model of mine. And these numbers are from all this. So this is their 10Q and 10Ks put into there. Grab from here from their financials. So we get a high of 73.5. Well, I get a $90.61 fair value, which right now is actually 128, almost 129%. I guess you say upside. The current price is $39.57, but my fair value is saying it should be at $90.61. You add margin of safety upon that. The acceptable buy price for me will be $58.89, which is bringing me to a upside of $56.33. So my estimate of their fair value, and again, this is with a 12.5% rate of return. It's above their high. And if I'm not mistaken, it might be using like a 10% rate of return to match the market. Let's just see that. Oh, to match the market is 128. Let's see, 7.5. What type of return are they expecting? 15 would be right here. So that'd be about 13. Nope. 14. About 14.5%. Nope, no. It's not. It's like 14.25. This is 14.15. $14.35. That's about as close as I can get. Should be probably 14.30. That's the closest. So about they're expecting on the high end about 14.3% rate of return, but for me it's 12.5. And eventually I'll make videos explaining all this out, why they come up with these and what their importance to my evaluation. But that's pretty much it. Let's do the gut check score. So 1, 2. Not this one, needs to be over 20. If I'm not mistaken. Yeah, needs to be 20. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you get a score of 10. But that's pretty much it, folks. I'll take care. See you guys. Peace.